part of the game is failing. And you can get a stock pick wrong, whatever. That happens all the time. But I think you have to fail epically a few times at this business. You have to really get hurt badly and, question what your career looks like and why are you doing this thing you're doing, and then show up the next morning and lose another 5 or 10% over and over and over again.
Hi, everyone. Welcome to another edition of My Life in 4 Trades. Joining me today is Harris Kupperman, the founder and CIO of Praetorian Capital. Enjoy the conversation. Hi, Harris. Welcome to My Life in 4 Trades.
Hey, Maggie. Thanks for having me on. I appreciate it.
So it is our tradition before we jump into the actual trades, just to get a little bit of information about your background. So where did you grow up and what were the early years like for you?
I grew up in Long Island. My early years were in Long Island, I guess, which is probably the most boring place on earth.
Is it?
Pretty much. My parents told me if I got myself into a good boarding school, they'd pay for it. And so I applied to every boarding school ever when I was 14 because I wanted to leave Long Island. And I actually got into quite a few of them, and I ended up going to Phillips Andover. The happiest day was leaving Long Island. My parents are still there, and about once a year I go say hi to them, and nothing's changed.
Yeah, listen, like the suburbs aren't for everyone, right? And some people know that really early on, and it takes other people a while to figure out that that's not really, their spot.
Yeah, I figured it out about when I was 5. My parents used to take me into the city. We'd go do stuff, and I'd say, "So why do we live here, not the city?"
So what was boarding school like? What was that experience like?
Well, it was like what's the saying? Out of the pot into the frying pan or something. I didn't really know what I was signing up for, and you end up with a lot of structure. Whereas my parents just kind of let me do whatever I wanted to do. Boarding school has rules, and you're not allowed out of the dorm after a certain hour, and you have to sign in and sign out to everything. And there's like this imaginary line around campus where if you've left campus, you get demerits, and you can't. You're kind of stuck on this campus, which is fine because, when you're on the campus, there's less rules and you learn how to basically live your life and ignore the rules and hope you don't get caught. And so by my senior year of high school, we knew all the tricks of all the rules. We had plenty of booze and, we just did whatever the hell we wanted. I wasn't a very good student, so you could probably tell that I didn't pay much attention to class. I just wanted to be a free spirit.
Yeah, well, it's funny because you were good enough to get into all of them. So intelligence wasn't the problem. You just didn't like the sort of structure of school. Was that it?
I just didn't like school in general. When I went to college, I got great grades, and it was a good deal. I went to Tulane in New Orleans, and it was a good deal easier than Andover. But no, I just don't like the whole idea of studying and writing papers and showing up to class. It just never was my thing. I don't know. Some people just love it. My dad became a doctor, and he did, 15 years of college to become a doctor. And I was so happy to be done. Yeah. That's what makes the world, right?
Yeah. So were you always interested in numbers or a math guy? Like how did you discover finance?
I'd been a decent math guy. And, all the rich kids who went to Phillips Andover, I paid my way through high school, often just like being a chess shark. I would play them all at lunchtime and, $5 a game. And that's how I got my spending money. And so, that was pretty good until no one wanted to play me anymore. And then in 97, when the financial markets crashed, I saw all these guys in suits running around looking like lunatics. And I felt like I didn't know anything about the stock market, but I felt like it was very zero sum, like a game of chess. One guy wins, one guy loses. So I'm just thinking to myself, if all these guys in suits that are corporate types are losing a bunch of money, and this is back when they still had a stock exchange and a floor and everything. Yeah. I figured there was some other guy who was taking all the money. And so I said, why am I wasting my time with chess? Let's go beat up these bigger guys, like they have real money. And so I dedicated myself to learning how to figure out how the stock market worked. And chess, there's a ton of books written about it, but the books are pretty logical. When it comes to stocks, there's a ton of books written, but the vast majority of them tell you the exact wrong thing to do. They tell you the exact opposite of what you're supposed to do. It's funny how many people have been unsuccessful in finance who then write books that are bestsellers. I mean, if you can't make money at this, why write a book? And so it started a very long journey for me of trying to figure out what works in stocks. And some stuff works and a lot of stuff doesn't. And then there's a lot of in between.
Yeah. But you feel like if you think the books are wrong, you feel like you've figured out a pretty good handle on what's right?
Well, like 25 years later, I'd like to think so. I mean, like all the stuff I have now came from the stock market. It's kind of like this piñata that you wake up in the morning and bang over the head and candy comes out. And sometimes, the piñata is empty and, sometimes the piñata swallows you. But most of the time, you need groceries, you go beat up the piñata. And so I'd like to think I figured it out now, but I don't. There's a new surprise every day. I like to tell people that I've made a lot of mistakes at this, but I hope to make new and more creative mistakes over time, not just repeat the same mistakes. So I keep learning.
Yeah, that's so funny because, creativity and a willingness to sort of not only fail, but kind of examine the failures is something that comes up again. And I guess you have to have that muscle, right? If you're gonna do this.
Yeah, I think part of the game is failing, and you can get a stock pick wrong, whatever. That happens all the time. But I think you have to fail epically a few times at this business. You have to really get hurt badly and, question what your career looks like and why are you doing this thing you're doing, and then show up the next morning and lose another 5 or 10% over and over and over again. It's just part of the game, and it takes a lot of mental fortitude. I mean, in the end, stocks are really, really easy. Buy good companies at a fair price and go to the beach and let some management team do all the work for you, and you focus on your surfing. Like, stocks are super easy. It's just amazing that people can't just do the easy thing because they either press too hard or they want to, guess the market, second guess the market, triple guess the market. They have these wrong ideas in their head, that there's too short term, or there's a billion flaws you can have in this industry. And usually, what sinks most people is leverage. And all these things are solvable and logical, and just buy good companies and go to the beach. but I guess that's why we have an industry.
Let's talk about your first trade. And this is one of your failures, one of your worst trades. And that's investing in Mongolia and building Mongolia Growth Group starting in 2011. So set the scene for us first. Like, what's happening in your life at this time? Where are you working? Are you working in finance?
So at the time, I have a successful hedge fund, and we had been investing all around the world. And a friend of mine asked me to go look at Mongolia. And in the summer of 2010, I went to Mongolia. It was booming. It was the fastest growing economy in the world. We had a list of mega projects, as they called them. They were building the world's second largest copper mine, for instance. They were looking to build one of the largest coal production and transshipment facilities globally. It was a $6 billion economy, and they had like $60 billion of capex being built, and the economy was screaming out of control. I saw what was happening there, and we looked at the stock market, which traded about $10,000 a day, and I opened a personal account and bought a couple shares, and I just couldn't put any money to work. I gave one of those famous orders to the broker: if it has a ticker symbol, buy it. And I'd wake up in the morning and we'd get, confirmations. I bought 7 shares of this. I bought 3 shares of that. It's like I spent $100 here and $12 there. And I asked the broker, what does this company do? And he just goes, oh, it does something with cashmere. This one does something with sheep. It's just, okay, just keep buying, just keep going. I'll send more money when you finish but I realized that there was the other liquid market in frontier markets is real estate. And so we launched an entity. We raised $51 million to invest in commercial real estate in the capital city of Ulaanbaatar. We listed the company in Canada. It's still publicly traded. I'm the chairman and CEO of this, so this is all publicly known. And we went about buying some of the best commercial real estate in Ulaanbaatar, the capital city. We put together Mongolia's only institutional property management and brokerage, Mongolia's only institutional property management team that could do everything from leasing to brokerage to rent collection to maintenance. We built the number two broker of sale lease transactions for third party. We did everything we told shareholders we would do. But unfortunately, it was pointless because a year after we started the company, they had an election. The wrong guys won. They banned foreign investment. They arrested all the foreigners. They stole everyone's assets. They made the place miserable. It went from 16% GDP growth to 3 years later, the IMF had to bail them out after all the politicians had stolen everything that moved. And we survived as best we could. I have a great team on the ground there that's, really doing amazing work under impossible circumstances, but the economy continues to contract. It's been a decade-long depression. The currency's lost, 70, 80% of its value. It's just been a truly, truly miserable experience. And I don't wish that on anyone. But I think the real lesson for me is that, people talk about illiquids in stocks. I own 9.9% of a company and, it's 100 trading days to get out of it. But, you call up a broker and there's always a block available. There's always someone. You might not like the price, but there's always liquidity. When you own commercial real estate and you have a team of 20 people on the ground and you're, chairman and CEO, there is no liquidity. When you get a trade wrong, all you can do is put your head down and cut as many costs as you can and extend the runway on the business and hope to come out the other end. One day I think Mongolia will be a successful country. I just don't know if that's in my lifetime. But I hope whoever eventually inherits my shares will inherit something of value because we have great assets in that country. But those assets are totally worthless right now.
Was there any warning? Because anytime you're talking about, especially frontier markets, that's the added part of the equation or the calculation is I don't know if you want political risk. Was that apparent at the time, or did it look like they had really turned a corner and were just like on a completely different path before this regime came in?
It looked like they had really turned a corner. The party that was in power was saying all the right things. They were Western educated, which isn't always the best thing, but these guys were doing the right things to grow the economy. There was a weird political dispute between the prime minister and the former president, who are the same party. And the ruling party ended up fracturing. And the prime minister and the president decided to campaign against each other. And the natural result is that 6 minority parties that no one in any way had any affiliation or love for all created an alliance and very narrowly won the election. And you had parties that had absolutely nothing in common, that saw nothing similarly. And suddenly they had a ruling coalition. And then after they had a ruling coalition, they didn't really know what to do next. And they both basically squabbled with each other for 4 years, arrested each other. They changed the ministers every week. I think the only thing they agreed on was stealing stuff. And the net result was that the economy collapsed. And it's, the ruling coalition won in a landslide 4 years later, like true landslide. But they haven't been able to pick up the pieces and get any momentum going, partly because commodity prices were weak in 2016 when they came back into power, and it's a commodity-driven country, but partly just because stuff happens. I don't know how to explain it. Some countries are massively successful and some aren't. And I thought this would be much more like Mexico with, it goes forward a couple steps and backwards a step and then forward a couple more. This one kind of set itself on fire.
Yeah, it's been the sinkhole. Did that turn you off of doing any kind of emerging market or similar type investments? Like, did you take that experience and really change the way you approach those kind of opportunities moving forward?
Yeah, it has actually, because I think you can go far out on the risk curve and get, commensurate upside, and you can do that in, frontier markets. You can go just slightly out on the risk curve here in the US and maybe you don't get as much upside, but you don't need to get 20, 50 times your money. If you make 5 times your money every couple of years, it's good enough and you have no downside or minimal downside. And so the risk reward equation is just better in these more developed markets. And I want to be clear, I haven't given up on Mongolia yet. I think it's going to work. I've been waiting 10 years and I might have to wait another couple more decades. But we still have our assets. We still have a great team and they're doing amazing work under impossible circumstances.
So your second trade is another one of your worst. And this is investing in AIM is the ticker. How do you say the name in Canada in
I think it's
2017 and 18?
AMIA
Yeah.
or AMIA. It's
Yeah.
funny. We owned the shares for a long time, and I still wasn't clear on how to pronounce it.
Because you just have to say the ticker. So what's happening here? So are you still running your hedge fund at this point? Is it under the same hedge fund that you buy these, that you get involved in this trade?
I closed down the hedge fund to focus on Mongolia. As the economy went to hell in Mongolia, I needed the full focus to salvage the investment. So this is just my personal money. I bought shares of AMIA. AMIA has a number of loyalty programs, or it had a number of loyalty programs, including Aeroplan, which is the Air Canada program. And Air Canada canceled their loyalty program with AMIA. And so the stock collapsed. It was in the high teens before, and it dropped all the way down to $2. And
is it an airline?
no, it's a loyalty plan. You earn miles for spending.
The company oversees the plan. Yeah.
Yes. So they the airline buys miles from them that they give to customers, and these guys then redeem the miles and process it. It's actually a really good business. But the program was ending in 3 years. So they announced that they were going to terminate the program, which normally would be a non-event, really. I mean, it's a very big piece of the business that's going away, but they had other businesses that were very valuable. So the stock should have dropped. We thought it was undervalued, and we bought a lot of shares. I mean, I bought a lot of shares. And then I came to realize the guys running it were like criminally insane. I'm not sure if they were just truly incompetent or if they were doing something blatantly illegal. But I've been investing for 25 years in lots of countries around the world. I've never seen a profitable division that was sold and they paid over $100 million for Sainsbury to take a profitable division off their hands. It was a division that did about 40 million of EBITDA and a good chunk of cash flow, but they paid someone over $100 million to take it off their hands. Normally, you either shut down a money-losing division, but it's profitable, or you get paid. Like they paid someone else to make it go away. It just made me realize that you were dealing with criminals. And it's this very unnerving experience because, the stock's trading at $2. And, before they did this illegal transaction, I thought it was worth maybe 20. And after the transaction, I thought it was maybe worth 15. Like you have this stack of businesses. And I just realized that they were going to parcel out all the businesses to all their drinking buddies and probably, get kickbacks on the side. And I was going to be left with nothing. And I don't like being a victim, but I didn't know what to do about it because when you have a hedge fund, you could go buy more shares. You could threaten to buy more shares. You have resources. You could spend legal fees. We put together, a coalition of the willing amongst some friends of mine that own shares. We had a conference call, and I thought everyone would chip in. I own X number of shares. I'll pay X percent of the legal bill. But everyone, democracy doesn't really work in real time. Everyone said, "Oh, I'm a mutual fund. I'm not allowed to pay legal fees," or "I don't agree with the lawyer we're using." And everyone had an opinion. I said, "We're going to lose all this money if we keep arguing." And it just realized that when you don't have enough capital, you're going to be a victim sometimes, and you can't solve your own problems. Eventually, I realized there's an odd quirk of Canadian corporate law where if board members don't get more than 50% of the votes at the shareholder meeting, they have to resign. And so I launched a no confidence campaign. It was a one-man political effort. I got the list off of Bloomberg, and I just started calling every shareholder I could find on the list. And, guys are like, "Kuppy, who? What?" It's just hang up on me. But some guys would listen to me. They're like, "Yeah, these guys are scumbags. I agree. We're going to vote against them." And I mean, think of it. A lot of shareholders don't vote, especially institutional ones, because it's too much effort and it's like, corporate governance and legal. But, we ended up getting 2 board members fired. The CEO got kicked out. We won effectively, but, they still had a bunch of corrupt board members. And, it ended up that some guys I didn't really know signed a standstill that they ended up getting control of the board with the help of some other hedge funds. And they kicked out all the bad people. And they salvaged the value. I mean, in the end, they sold another really large division for 10 cents to the dollar, what it was worth, 20 cents to the dollar. But, I paid $2. I sold mine at $5. But it wasn't because of my, analytical brilliance or anything. It was, I relied on the kindness of strangers. And it just made me realize that if you're going to be an investor in markets, you could either invest in large cap companies where if you change your mind, you sell it the next day. Or if you're going to, own large positions that take a few weeks to sell, you better be able to have the strength to fight back. And it was kind of the motivation for me to launch a hedge fund, just because I wanted more capital. I don't want to ever be the victim again. And it was a real learning experience. I mean, I made money on the trade, but I didn't deserve to. I deserved to lose every cent.
So it's interesting because the two similarities in these trades are sort of diligence in terms of who's running it, which you presumably looked at, though. Like you said earlier, it's stock. Look at the stock. Do they make money? Is it a good stock? But here it was sort of an unexpected turn in who was actually holding the reins of the company, I guess, or sort of in control.
Yeah, I mean, you never really know about someone. They all went to a good school. They all worked at other large corporates. This guy was newly appointed as CEO. The old CEO had resigned. I mean, look, everyone has a good resume at the start, and
Yeah.
I talked to the guy. He seemed like a logical person the one time I talked to him, but stuff goes bad. I don't really know. Maybe it was him. Maybe it was a board member doing stuff. I don't know who was in charge there. You just never really know sometimes, and that's part of the investing thing. Sometimes just stuff is unpredictable and it goes bad. And
Yeah.
in this case, when it went bad, most people would sell. Like it's human instinct. When a building's on fire, you run away. And I'm one of those guys that runs into the building.
You're like, what's going on in here? How can I change the course of what's happening?
Well, if I see everyone else running out of the building, just instinctively I say, well, there's got to be some opportunity. Let's go poke around.
You almost sounded like you kind of took on the role of a whistleblower almost, trying to oust the company management and launch a no confidence campaign. Did that come naturally to you, or was that a sort of new role for you?
Oh, this is a one and done. I don't intend to ever do this again. I had a couple hundred conversations over like a 2-week period. I didn't sleep, but I wasn't going to let my money get stolen. I stay usually pretty far away from politics. I don't like politicians, and suddenly I felt like I was going around kissing all the babies, and. Please vote for me. Except it wasn't even vote for me. It was just vote against that asshole. It was just, I don't know. It was a weird thing. And hopefully I don't have to do this again.
Were you shocked at the level of, if it wasn't criminal or wasn't corruption, at least really questionable activity? Because this is a publicly traded company, right?
Yeah, it's a couple $100 million company in Canada. As I said, I've never seen a company sell a profitable division and pay someone to take it away. I've seen, companies pay like, oh, we have asbestos liabilities. We're willing to backstop those liabilities to a certain level, or, this thing is losing money. We'll put $5 million in and sell it to you for $1 so that, you guys can deal with the employees. We don't want to, terminate guys on our watch. It's bad for I've seen those sort of things. I've never seen someone spend over $100 million to get rid of a profitable division. And then they tried to sell their largest division for like 2 times earnings. Like it made no sense. The guys who ended up buying it off them recapitalized it. They sold their largest division for like $400 million, and I want to say that they immediately sold a piece of it for $2 billion. Like it was just insane. And so I just saw this thing just being picked to pieces, and I just don't know how people can be this dumb. Because they were in this industry a long time, and I'm kind of a tourist that learned a lot about the industry fast. But I couldn't see how they could be making such bad mistakes unless they were getting kickbacks or something. It makes no sense.
Yeah. Were they ever investigated?
They should all be in prison. No, I don't think they've ever been investigated.
That's also shocking, right? If this is
It's Canada. Corporate fraud is kind of like what keeps the economy going there. And without junior mining, there'd be nothing up north.
Oh, I apologize to our Canadian viewers, I guess, but
I mean it.
Let's talk about your third trade. Now, this is one of your best, and this is pivoting the portfolio in March of 2020. So where were you when we went in? I'm assuming it revolves around lockdown, but where were you in March 2020? What was going on with you as we all went into this weird world of lockdown?
Well, I was living in Miami back then. I mean, I'd been in Miami 17 years, and I had relaunched my hedge fund. And, we started seeing stuff in the news in January. Everyone was watching Wuhan, and everyone kind of was like, "Oh, that's interesting." And me, I started really paying attention to it, and I said, "This is going to be bad." And we sold a bunch of stuff in January and February, right before the U.S. markets collapsed. But I didn't sell enough. I wish I'd sold a lot more. I was also too busy stockpiling
toilet paper and paper towels.
I have a small condo in South Beach, and like 20% of the space is still like cans of tuna fish and tomato sauce, and you just can't eat all your COVID food. Like I don't spend enough time in Miami to consume it all. Like it's going to be there till the day I die.
It's like a time machine.
It really is. And I don't think canned tuna ever goes bad. It's just the mercury just keeps preserving it. But no. So anyway, we saw things going bad, and I was slow to sell enough stuff. Thankfully I sold what I did. And then, all of a sudden, it was like this weekend where, they had a couple cases in the US, and then everything just shut down. And we were at the point where by the time the US was shutting down, I was less scared early on, I was like, wow, Chinese guys are just dropping dead in the street. This is scary. By the middle of March, I was basically of the view that this is a bad cold. And I was totally not scared in any way. And I'm just like, why are they shutting down? It's a cold. I just didn't understand it. I think I was a little slow to pivot, but once I understood what was happening in the US, like I never in my wildest dreams thought that you'd take the world's largest economy and shut it down over the common cold. And, but when I realized what was happening and realized what was happening to the economy, and then I saw what the central bank did in response, where they just printed $1 bajillion and handed it out to everyone. And, the government is like, PPP, no documentation. Here's money. I just realized the economy was absolutely going to boom. And when you throw that much money at the economy, where does it go? It goes into stocks, and it goes into risk assets. And it literally doesn't matter if we're all going to sit home for the next 2 years. Risk assets going to boom. And I just realized risk assets were going to boom. And I looked at my book and I said, I don't own risk assets. We owned stuff like tankers, which were doing very well, going into COVID. And then I realized, if global oil consumption is down, they're not going to do well. They're not going to recover. We owned companies. My biggest position at the time was a company that does default mortgage servicing, which would have been a great company to own in a recession. But if the government has a
nobody has to pay
ban,
rent.
Yeah, they announced a moratorium on foreclosures. Well, there's no defaults to service. Like you've got these really expensive lawyers doing nothing. And I went through the portfolio and I tossed these. And it was painful. Like we own this company, Altisource. It's the largest default mortgage servicer. It was a $20 stock. In February, it went to $6. The day they announced the default mortgage service moratorium, the stock collapsed. And I sold every share I could in one day. I got out at 11. I mean, 2 years later, it's still at 11. Like I would have locked up all my capital for no reason. And I pivoted really fast into the beneficiaries of money printing. We bought all of the inflation assets, and we bought energy. We bought all these things that would do well in an inflationary environment, and I haven't looked back. I mean, if you look at the book I had in February, it's up from February of 2020, but it would have been a kind of miserable 2.5 years to get to where we are today. And if you look at our book, we're up a lot.
Yeah. It's funny because timing a move like that is what so many people struggle with, because you can always think of, especially with something like that coming at us, you could have made the argument, and many were at that time, they just didn't see that the whole world would lock down. I mean, it's just never been done before. So, at some point you've got you're kind of making a bet, I guess. What gives you the confidence? Like, what gave you the confidence to say, right, this is I'm looking into the future and this is what's going to happen?
Because the Federal Reserve said we're printing $1 bajillion and we're giving it to everyone. And they said, if that's not enough, we're going to print another $1 bajillion and give it to everyone. Like they basically said, we stand behind the stock market. I wrote this blog post on my blog, Adventures in Capitalism, and I called it Project Zimbabwe. And I said that they will print enough money until everything goes straight up, and they won't stop until they've overshot. And it was so obvious then. And so we went and bought, crazy worthless things. We bought like cryptocurrencies, and we bought, brokers of cryptocurrencies. And we bought crypto miners, and we bought, just the sort of stuff that goes up when you print a ton of money. We bought energy stocks like, the price of oil went negative. Well, what do you think happens to oil production? Like, if you have the staying power to wait it out a couple months, you're going to make a lot of money. Like all these things, there was pretty obvious stuff, and we sold what were genuinely good businesses that we thought were going to be, partly impaired by COVID. And there's nothing wrong with the things we sold, and we sold them at, kind of crazy prices, quite honestly. In Q1 of 2020, I was down by half, which as a hedge fund, you're not supposed to really do, but it just happens sometimes. And rather than sit there and cry that we're down half, I said, let's realize these losses and put it into things that will get me whole and then get me a lot more. And, by, I think it was June or so of 2020, we were flat on the year. We ended up over 100% on the year. And we did the same the year after because we pivoted into inflation stuff. And, what was amazing to me is how many of my friends were, and I think partly this is where you're based. So I'm based in Florida. I mean, by May of 2020, DeSantis basically said COVID doesn't count, and you guys go out there and prosper, go out, go to the beach, have fun. And, the guys in New York were kind of, taking the other route. And it was a science experiment effectively. And, so I have friends in New York that are saying we're all staying home and doing nothing. We're buying Peloton and we're shorting stocks. And I'm out there saying you got to go buy reopening stuff because the world's going to reopen. I'm in Florida. It's inevitable. And, you have this like divergent view. And, I'm amazed how many of my friends lost a fortune on the way down and then shorted on the way up. And I'm sitting there as levered long as, my risk taking ability will allow because I just knew it was going up. And so it's just, sometimes people see things differently. And I'm so happy. I think a younger version of me would have been frozen and said, especially when you have it's the second year of my hedge fund, we can't possibly take this loss and admit we made a mistake. A younger version of me would have just sat there and cried about, COVID. And instead I just pivoted and just carried on. And I think it's really important when something goes wrong, to adjust as fast as possible. If you're going to panic first. When they banned, mortgage moratoriums on my largest position, and it was, it was a $20 stock that opened at 15. I mean, it opened at 15 because in the pre-market I was already selling. I said I'm going to be out by the end of the day. I don't care what the price is. And I got a 12 average on my exit, and 2 days later it's at $6. I felt brilliant. And
you felt bad first, and then you felt brilliant, right? Like you don't like to see having to sell lower, but you knew that was the right thing to do.
I was more annoyed than anything else. I was saying, this isn't constitutional. And a couple of my friends own the shares. They're like, the government can't do this. Like, that's impossible. And I'm saying, yeah, but what are you going to do? You're going to sue them in court? It's going to take 2 years. And in the end, it was unconstitutional,
Because you already have Mongolia in your pocket, and you know that you can't fight some of the bigger forces, right? So you better.
Well, this one I knew that they would win in court. It was obvious. But, there's a company that's going to lose a fortune waiting 2 years before it, gets spit out of the court. And I just said it's too hard. Let's go buy the things that go up when, the Federal Reserve prints money and the government gives everyone a stimmy. Like it was just easier that way.
I'm curious. So when you get something so right on a pivot like that, is it hard to get it right again to get out? Because that's kind of the conversation everyone's having now, right? Like if you got that right, you saw where that wall of money was going to boost risk assets, and you bought for the inflationary period. How do you know when to keep riding it or when to take those winnings and walk away or look for another opportunity?
So I've been doing this for more than 20 years, and I'm a trend investor. I do a lot of inflection investing. You get there right at the inflection, and I always sell too soon, but you kind of learn when it's the seventh or eighth inning and it's time to kind of get off the bus. This is obvious signs, because a lot of these things trade on emotion. Like Bitcoin has no logical price. Let's talk about Bitcoin, okay? Because I own a lot of Bitcoin. I bought it at 9,200. There was a chart pattern. It looked like, it was consolidating. It's going to go up or it's going to go down. If it goes down, I lose 500. If it goes up, let's see what happens. And it just kept going up and up and up. And, it went up a lot. But there's no logical reason why a Bitcoin should be one price versus another. It's just, human emotion and, crowd psychology. And I wake up one day and, I'm very active on Twitter, and people are forwarding me. There's a couple of porn stars that are suddenly talking about crypto. And I said, that's a little odd. Like, porn stars, they don't talk about finance. And suddenly they're copying, tweets from friends of mine. And there's this one lady, Mia Khalifa, who's, I guess, a really famous one. She's tweeting nonstop about crypto, and she's sitting there in lingerie. And I'm thinking, this is pretty late cycle. I literally sold a third of my cryptocurrency I sold a third that day. I was just like, this isn't how these cycles work. I'm late here. And, I kind of slept on it for a couple of days, and suddenly there's more porn stars and more, because I asked some of my friends, I'm like, is this, are there other porn stars tweeting about cryptocurrency? They start sending me, it's like, wow, there's a lot of them. And so I sold another third. And then a couple of days later, I'm just like, to hell with it, I'm out. And I sold mine on average about 58,000. It peaked out a few weeks later in the 60s. I was a few thousand off the top and a few weeks too early. And, I have no regrets. I knew it was late cycle. It was I'm long energy right now. And when porn stars start tweeting about energy, it's probably time to sell. These are just crowd psychology things. And, they talked about this in the 1920s where showgirls were investing in stocks. It's the same thing. And I'm not trying to discredit any of these people. I'm sure they've thought through their investments very well. But, they tend to be near the end of the cycle, not the beginning of the cycle. I tend to be the beginning of the cycle.
So your fourth trade is less what you're sort of where you're trading, and it may be more how you're trading. And this is one of your best, and that's transitioning from a friends and family fund into one with a much larger capital base, which is interesting. So what's the motivation behind this? And this is pretty current, right? This is something you're going through right now.
Yeah, this is a this year thing.
Love it.
So we talked about why I relaunched a fund. I needed more firepower because I don't want to ever be a victim. Amy really opened my eyes. And so we raised some money amongst some friends and family, and it was a smallish fund. We didn't go out market. We didn't really do much of anything. It was me in my gym shorts, and I had a CFO that was helping out in the back office. It was a small little operation. And about a year ago, we decided to go from being a small friends and family thing to an actual business where the focus is making money for the founders as opposed to just playing defense. And so we expanded the fund's size to we're going to cap at 250. We're about 180 right now. But we decided to expand the amount of capital we're taking on. We hired a good friend of mine to be on the client side. So I take a lot less phone calls, which lets me focus more on the investing side. We hired 3 analysts. We launched a data analytics product that is kind of internal to us that helps us identify a lot of these inflections. It's called Kedm, KEDM.com, if you want to go check it out. But it was mainly a research project for us to systematize what we're doing internally. And with the analysts, we have the capacity now to take all these inputs, these corporate events, and actually try to find the inflections and understand what's going on. You see a cluster buy from insiders. Well, that means they think something's happening. Well, go figure out what they think is happening. Go chase it down. And so we have a team, and I really think that we will be able to do a lot more and cover a lot more ground than I could do just myself. I mean, when it was a one-man show, it's just me. And I want to be able to do much more in-depth research. I want to be able to cover more sectors. I want to be faster on the inflections. When you show up and you're the first inning of an inflection, you're taking almost no risk. The expectations are so low that if it doesn't inflect, you get your money back. It's just the street has no expectation. The street expects bad things to continue because they've been going on for 10 years. By the time you get there in the third inning of the inflection, the street has some expectations. If it doesn't work, it's going to cost you money. I want to get there faster and smarter and choose the right way to play it. And that's why I built a team around me to really grow what we're doing. And it's early days. And unfortunately, we got hit by a hurricane like right after we started the process. But I feel like it's really making strides, and it's going to make us unstoppable in the next few years.
It's interesting, having been in the business this long, a lot of other people I talk to are looking to sort of pedal back from size, from responsibility, from having to address clients. And you're running in the other direction.
Yeah. I just think there's an opportunity to cover more ground, and you need more AUM to afford all these people, obviously. But we're not looking to be a multi-billion-dollar fund or anything. We're going to cap at 250. I think that leaves us very, very nimble. I just think you can cover more ground. You know how many times I look at something and I'm just like, I can't possibly learn about this sector. By the time I have 5 days, it's going up 5% a day. Like, you just got to commit capital and then figure it out later. And that's not a good way to invest. Pattern recognition is something I'm really good at. So I'm okay with committing the capital and then figuring it out later. But it's not the right way to invest. You should have figured it out 3 months ago. And so having this team lets us go down rabbit holes and really understand things fast and have a built up repository of knowledge. Sometimes these inflections are like with COVID, came out of the blue. Central banks around the world did something that was totally unheard of in history, and now there's going to be after effects for decades. But oftentimes these inflections are pretty obvious, I think. You have sectors that have been miserable and they get less miserable and less miserable, and then they start going good. And we have a good inventory of stuff we're researching now for 2023, and like a shadow inventory of things we think will inflect in 2024. And that's how you have to be as an inflection investor. Now, I tend to be 4 to 8 themes, but you might have 20 themes in your quiver, and you're just waiting for the right one to express itself. And why not have 100 themes in your quiver? That way you don't miss stuff, and you have more flexibility. But, things don't inflect, and we still have to spend all the hours following them. And so now I have people to help with that.
So what keeps you so motivated? What keeps you in the game?
It's this big jigsaw puzzle, and the pieces never fit. And I just find it fascinating, honestly. It's not really the money. I don't spend money. It's not because I'm cheap. I just have nothing I want to buy. It's really just, I want to have the best numbers. I want to, be able to talk to my friends and say, look, we did 1,000 bips more than you, and my friends are all bragging that they have bigger funds, or, they bought a bigger house or something. I just want to have the best numbers. And, look, when the day is done, I usually go out drinking with my friends. And also that's all I want to talk about is stocks.
You want to win the chess game. You want to beat everybody at chess.
Yeah, but now I don't need the $5. It's different.
Just the bragging rights. What advice would you give to others? I think especially people who maybe are newer to it, whether they're doing this for a living or whether they're just trying to, grow their own wealth. It's been kind of an interesting time if you don't have some of the experience, that you have. What advice would you give people?
I mean, be super skeptical, take nothing for granted, assume that everyone's lying to you, and read a ton. These cycles all repeat. There's 300 years of reasonably well-recorded financial history. Financial history is really just the mistakes of others. It's often politicians having short-term goals due to political cycles, whether it's election cycles or succession cycles. And, they have short-term goals that often are self-goals that have nothing to do with the well-being of their countries. And there are often after effects of these goals. If a politician wants to do one thing, it'll lead to some other cause and effect. And I like to joke that we have a 2-year election cycle in America, and my timelines are just different. And as a result, I mostly just watch politicians make mistakes. And then I sit around with my friends and said, that guy just made an unforced error. Who's going to benefit? Who's going to lose? And we just try to figure it all out. And if you get the trends right, it almost doesn't even matter which stocks you buy. If you buy the right stock, but you get the trend wrong, like you're going to get murdered. So get the trend right, and that's really the most important thing. I mean, I keep talking about this energy crisis, but and I know this is probably not the topic of your show, but I just want to stress it. If Western leaders are insistent on causing an energy crisis, I think they'll succeed beyond their wildest dreams. And if you ban exploration and production of hydrocarbons, yet you have no replacement because the green economy is in its infancy, and you have a 20-year gap between the green economy gets to where it needs to be, if it ever even gets there. Well, you can't just go to the global population and say, well, you're going to have to sit out for 30 years while we figure this all out. Like, there's going to be an energy crisis. And I think they're going to succeed beyond their wildest dreams. And, that's the big trend this decade. And, if you see the big trend, everything else has to somehow latch onto that trend, unless something tells you the trend is changing. And that's just kind of how I, focus on everything. Find the trend and ride the trend, and don't get off until, the porn stars show up.
Kuppy, it's been such a fantastic conversation. Thank you so much.
Thanks for having me on. I'm sure you'll edit this one good.
Well, that's not coming out. I guarantee you. Not only is it not coming out, there's a t-shirt with that on it, for sure.
Great.
All right, that's a wrap on this week's edition of My Life in 4 Trades. For more on the series, visit realvision.com/My Life in 4 Trades. Make sure to use the numeral 4.
Hey everyone, thanks for watching. If you like this show, you're going to love Real Vision Essential. At Real Vision, we talk to the most successful investors in the world and deliver videos that make finance interesting. It's all about helping you become a better, more confident investor. Now, we could dress that up in fancy marketing buzzwords, but it's really that simple. Oh, and right now, you can join Essential for $99 for a full year instead of the usual $239. Visit realvision.com/essential99 to join the Real Vision community. That's realvision.com/essential99.